So you can see how this could become a problem. And I think the Fed knows that even cutting rates or doing QE might not solve anything. They wouldn't be in such a panic, and things wouldn't be as chaotic if they could just cut rates and start QE again. Monday, November 24th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, the Fed is in a panic, specifically the 12 regional banks. They've kind of lost control of shadow banking, and we're going to look at that. It's a crisis that's brewing underneath the surface. Yes, we've been told that GDP is doing great, that the economy is going to pick up in 2026. But I'm afraid there's a lot more going on that the powers that be are concerned about. Of course, they're not going to tell us, but I have it from good sources. You don't have to believe me, but you might want to listen to it. Before we go further into that, I want to touch upon gold and the fact that the Italian government is looking to raise revenue from people's gold hoards, private gold hoards. And I think governments are going to become more and more desperate. The Western countries, US, UK, Italy, France, not so much Germany, but they're up to here in debt. They're trying to find ways to cover their fiscal holes. Government is not getting smaller. The public sector has a lot of political power. They want the goodies. People don't like taxation, right? And we're seeing the cost of living rise, mainly because, 100% because they've been debasing our currencies for so long, and it's going to continue because that's all they can do. But they're coming after everything, I think, and people have said, well, what if they come after the gold, confiscate the gold? Yes, people have been worried about that for 10 years or maybe 5 years or so, but in the interim, gold has done really well and it's still protecting you. And I'm not saying you need to get rid of your gold because it's the only protection, right? And we're going to quickly look at this story here. It says Meloni's government eyes Italian family gold in hunt for budget funds. Lawmakers propose scheme to encourage citizens to declare undocumented bullion to pay 12.5% tax on its value. Well, I think it's a non-starter. I don't think people who've been holding gold that's been passed down through the generations, be it a small amount, be it a big amount, are going to volunteer to do this. And I was reading in this FT article that a lot of times they sell this gold in like the black market, so to speak, so they don't have to declare it, because there is like a 26% tax on gold if you declare it and you sell it. You wouldn't want to do that, of course. But this is another reason why I'm going to give another shout out, and I've been affiliated with them for maybe about 3 years now. Dirty Men Safe. Yes, it's getting to that point where you need to hide some of your possessions, and with Dirty Men Safe you can hide, secure, and retrieve your valuables with ease. Yeah, check them out. We have a landing page to Dirty Men Safe. You get 10% off. They ship to Europe as well. So if you're in Italy, if you're in the UK, if you're in Germany, France, if you want to hide your valuables, not just gold and silver, other documents and jewelry and heirlooms, I think this is a good way to do it. It's I'm not saying you should have all your physical gold and silver at home. I think a private vault with a company that you trust, like Gold Investments here in the UK, it is a good way to keep your gold and silver. Just the fact that they're talking about it in Italy is concerning. I'm sure a lot of other European countries are going to get an idea. Here in the UK, we haven't heard anything really about gold, especially in lieu of this coming budget on Wednesday, which is going to be very interesting. There's been plenty of speculation in the run-up to this budget. That's been one of the problems. They've left the budget. They've left it too long to announce it, and it's created a lot of problems for the economy. That's a huge mistake. Anyway, as I speak here, it's 7:38 a.m. London time. Rudy and I are up a little early. We haven't gone for our walk yet because it's been raining, but it's supposed to stop. So maybe we'll go after we record here for a nice walk. But I noticed that the markets are really quiet. There's not much going on. So when you look at that, you think, oh, there's nothing wrong. But and also the statistics, the jobs number were better than expected. GDP is going gangbusters in the US. The economy is hot, right? Even though they feel that they need to give people a $2,000 check. Why would they need a stimulus check if everything's so great, right? It's not great, right? And I was listening to Alex Jones yesterday. He was being interviewed by Clayton from Redacted. And he said he's in touch with the White House. They want to know his opinion of what's going on. And he said, he noted they need to stop telling people the economy is doing great, because it's not great for a lot of people. And so Alex Jones is saying that. But anyway, what I'm trying to tell you is that underneath the surface, the powers that be that run the financial system, i.e. the Federal Reserve, the big banks on Wall Street, they're concerned. Recently, we've heard comments from Jamie Dimon. I think he was talking about First Brands and Tricolor. I think JP Morgan lost a few $100 million in one of those failures. I don't remember exactly which one. And he called, he said that the cockroaches are coming out. And when you see one cockroach, you can bet that there's a lot of other ones. And I think that's what he means. So this is the whole shadow banking, private equity, private credit problems that I've spoken about. I started speaking about it at the tail end of this summer when Tricolor and First Brands were getting into trouble. Some people are saying, oh, this is just a fraud case in one company or another. But that's how it starts. I think these problems we've seen in private equity and private credit and these companies, it's just the tip of the iceberg. And why do I say that? Well, because after the 2023 banking crisis, yes, there was a banking crisis in 2023. Most people have forgotten about that. Silicon Valley Bank, they had to come and bail out depositors over 250,000. Yes, Janet Yellen did that. And I think, what they did at the time to kind of calm the markets down is that they pushed the banking sector to really limit the amount of risky loans that they could do. And what private equity and private credit have done, they've substituted the banking sector. That's why it's called the shadow banking sector. So these are private equity, private capital, hedge funds, family offices, you might want to call them, private investors. They've come they've taken the baton from the official banking sector. The problem with the private equity, private credit, and this shadow banking world is that it's totally unregulated in terms of lending. The regulators are not involved as they are with the banking sector, the FDIC, the Federal Reserve. And what I'm hearing is that the bankers at the regional Fed banks, and they know well what's going on in their districts. That's their job, to keep an eye on financial conditions, economic conditions. They are really concerned. There's like chaos, I've been told, because they have no way of knowing what's going on. They have no idea about these loans. It's something new for them. It's akin to what happened back during the great financial crisis. And I remember it well. It was Timothy Geithner, who was the president of the New York Fed. There was a story that came out. I might try to find it and put it here, but I remember it vividly, because I was involved in derivatives, over-the-counter derivatives, but I've spoken about, well, not over-the-counter, sorry, exchange-traded derivatives, but I heard that there was a weekend in 07, 08 where they were up all night, like throughout the weekend, trying to figure out all these derivatives deals over the counter for credit default swaps. It was a mess, and they didn't understand anything. The other thing I've heard from a friend who made a killing in the 08 crisis as a young hedge fund trader in London. He said he had to go to the Bank of England to try to explain to them what was going on. They had no clue. And they were totally inept. So I can understand why the people at the Fed now, they have no clue what's going on with all this shadow banking, credit and equity. So just to give you an idea, some points that are really concerning for them. I was told that default in private equity is being camouflaged. Yes, it's been covered. And how are they doing that? Well, they're borrowing even more. They're getting even more leverage to pay dividends, to pretend that things are great. I mean, paying dividends with borrowed money is just a really bad idea. So that's going on. The other thing that's going on is the evaluation of these assets in private credit, private equity is totally opaque. They don't really mark to market. They mark to wherever they want. There's no regulations, as I said. And I was talking about Jamie Dimon, about the cockroach. Recently, the bond king, they call him, or huge bond fund, I think it's Jeff Gundlach. He said that a lot of these assets are garbage. That's him, not me. But the concerning thing is the U.S. economy is about 30 trillion via GDP, and private credit and private equity is roughly around 3 trillion. We don't really know exactly, and we don't really know how many times they've leveraged that into over-the-counter derivatives, right? There's always those pesky derivatives that they kind of cleaned up, right? After the great financial crisis, they banned OTC derivatives, they regulated it. Oh no, I'm sorry, I'm joking. Nothing was done. And I spoke with Judy Shelton the other day. She spoke about this. She said it's a mess at the Fed. They're allowing these people to basically speculate with the sustenance of the American nation, the sustenance of the world, because these primary dealers, they're not just American institutions. Google New York Fed primary dealers. They're foreign institutions there, and everyone's paying for this. And yes, she said that there's 600 trillion in derivative notional amounts, and this is what they're betting on. But I think it's more than 600 trillion now, Judy. I think we're talking the 1,000 trillions, which is a quadrillion. So you can see how this could become a problem. And I think the Fed knows that even cutting rates or doing QE might not solve anything. They wouldn't be in such a panic, and things wouldn't be as chaotic if they could just cut rates and start QE again. And I think, yes, the whole problem is that we've had this financialization, we've had this Ponzi finance, especially since '08, zero rates for over 10 years, bailing people out whenever we need to. That the system is just unhinged now, and people are losing confidence in each other. Look at the repo market starting to flare up again. The Fed's having to step in because financial institutions won't deal with each other even overnight. So yes, faith and confidence in the system is collapsing. And my contact who spoke to me about this, he has physical gold. And he told me he's going to get more. The other thing that people are doing that you should think about is actually getting physical cash out of the bank and putting it in your dirty man safe, putting it somewhere safe, because things are going to get really turbulent. I can't tell you when it's going to happen, but once it happens, it's like it's not gradual. It's like I'm not gonna say the word. It hits the fan. That's it. You can't do anything about it. You gotta. It's better to be 1 month too early than 1 day too late. Once it comes out, once the crisis erupts, there is no time. And I think things are serious. I'm not saying you should stop doing what you're doing, like in terms of investments, but have some insurance. And that's what gold and silver, physical, outside the system provides you. Because nothing is certain in life. Not even, maybe the Fed will be able to solve this private credit, private equity, shadow banking problem. But the probability is very low that they will. So in terms of what the Fed's going to be doing soon, I guess they have their FOMC meeting on the 9th and 10th of December. They will decide on the 10th whether they'll cut rates. They will stop quantitative tightening, which is unwinding the balance sheet. It's the reverse of QE. At the end of November, so at the end of this week. Next week is already December. So that's what's going on. In terms of the market this morning, it's still quite early. We've got gold at 4,060, is down about $4. High's been 78, low's been 40. Silver is hovering around the 50 level here. The high's been 50.60. The low has been 49.67. The Dow futures is up 150. S&P is up 39, and the Nasdaq 100 is up 208. And that's another distraction. These stock market indices, they're still near all-time highs. It's like people don't care, and politicians, and they use that to say, oh, the economy is doing great. But the other thing I was told is that if you look at the Case-Shiller PE ratio, in 1929, when we had the crash, it was at 32. In 2000, when we had the dot-com bubble burst, it was at 42. In 2022, it was at 32 before we saw a crash in stocks and bonds. And prior to the crash in April this year, it was at 36. And guess where it's now? 40. So keep that in mind. And with that, I'm going to wish you all a great start to the week. Take care. Bye.